All right, Wednesday, the 13th. Welcome everybody from YouTube and Patreon. It's fixed, by the way. You're supposed to be able to join here if you're from Patreon. We just fixed the settings. So please let me know in the chat if you're in or not. Because if you guys are not, then we got to do something about it here. And I'm looking at the RGV, the software, since the title says that software goes ballistic. So we're looking at the RGV daily chart. If you can hear me fine, you see the picture fine, and you're able to join, please let me know. We'll begin in a minute. All right, great. Let's begin here with, some of these software charts, folks, are just going absolutely bananas. Let's look here. Some of the top performers today, pretty much all software. So here are some of these small caps that produced earnings. Of course, they're getting squeezed like Honest and HIMS. I know a lot of people want to pick against HIMS, but huge short position. Any good news for now, you just keep popping the stock higher, so you got to be careful. But you got Datadog, which we talked about. Datadog looks pretty good here from a technical perspective. But up 6% on what? Earnings were a few days ago. Why is it up 6% right now? The weekly still look good. You want to chase it. If you want to grab some software, this is still looking pretty good here. Snowflake, this one did not even report earnings, but somehow today it's popping 6.3%. Let's look at more here. Lucid, that's not a software, but Palantir, software, still going bananas. KTOS, defense/software, which the reason why I like it, I own it in the portfolio, that's going crazy. Zscaler, CrowdStrike, there we go. All of these software names, Team, of course, been going bananas, but these are just examples. There are laggards, by the way, like Okta. Okta's a laggard, so not all of them going bananas, but they're beginning to catch huge inflows here. And the reason, here, look at this one here, Workday. Here we go. What is this all about? Palo Alto, Roku is not a software, but you see these names, all of these software names. ACN, that's not really software, although they kind of do have a software business, but Autodesk been on fire recently. Look at this. We just look at right here since May. 59%, but most of these gains happened recently. You get the point here, folks. The software, Adobe, here we go. Adobe beginning to move, and it's reflecting in the IGV. What is the reason behind all of this? My 2 cents, a lot of folks did not participate, let's say, in the NVIDIAs and the Apples or whatever in the world, the stuff that's been going higher, mostly NVIDIA. So just they're looking at the charts, the year end. And they're seeing what we've talked about before, that the IGV been a laggard year to date. And they said, okay, if I'm going to buy anything right now, let's just buy software, since it is the laggard and still has technology and AI and all of that. And we see this kind of stampeding happening right here. A lot of it is not merited, to be honest with you, but right now it's just a hot inflow kind of sector. But the volume peaked right here in the IGV. Monday and beginning to taper off, still a little higher than usual. So if we look at the weekly here, still higher. If it begins to trend down, I think that's when we see IGV pulling back. No reversal sign yet, so that's what I'll be watching for. If I see any reversal signs, so here, no, you see you open gapping higher, you close at the highs, day after day after day. If we see reversals from the highs to the lows, that'll be a good sign that. And you don't want to see it for all of them, okay? You don't want to see it in one name and not the others. You want to see them. You want to see it in all of them. And you'll see it in this chart, the RGV. This is why it's important to watch this chart pretty good. That will give you a short trade in the software, whatever ones you're looking at, even the individual names. But you got to see the reversal sign in the software ETF first. Now, if you want to enter or chase some of these pops in software, Datadog still not overbought, still looking pretty good here. It might have more to come. And Okta in cybersecurity been the laggard, and I think it's finally catching a little bit of a bid here. We can argue that this is maybe sort of a double bottom. So perhaps some software for now as in part of your portfolio all the way to the year end, and then maybe trade the IGV down once you see that topping signal as a hedge. Any other interesting play in software that we didn't talk about? You have some of these smaller names. I don't see those as reliable. I want to pick the bigger names, something that already has earnings. You see Cloudflare going crazy too. So Affirm pulling back a little bit, but I mean, all of them, even Square. I mean, here's a funny story for you. My nephew, who's the next Warren Buffett, of course, at least that's what he thinks. He says that Block is the next great idea that he's going to buy. Square. So this one, I mean, it's a little too hot on the weekly right now, right? So I wouldn't buy it right here. But since he's talking about it, he probably heard it somewhere else. And we have folks now also stampeding to buy it. So we'll see what happens here. But there is a little bit of really good sentiment right now in software. We'll see if that's going to last or not, because it is end of the year stampede. They're just looking for an opening to stampede in. Now, let's go back to the conversation that we talked about in the morning brief, which was not really a brief, but telling you that watch out. From the formation that I'm seeing in the pre-market session, it looks that yields are going to come back up. Why? And the dollar too. So let's begin with the dollar. So the dollar, the moment we got the CPI, it did drop. So 5:30 right here Wednesday, we got a drop right here, and then came back. And now it's at the highs. So there's no stopping the dollar right now. That's going to hammer gold. That's going to hammer all the metals will be weaker. Even though the gold miners are doing pretty good despite the dollar going higher, but still, you can't really, you're not out of the woods in gold. You're not out of the woods in steel or copper or palladium until we see that dollar coming down. A lot of these names have the tailwinds of the trade war, which makes them attractive, but you got to see that dollar at least showing some signal. The agricultural names are hot today for some reason, so Mosaic got hit really hard recently, but it is coming back despite the dollar going up. When you see that kind of stuff, and by the way, if you look at the futures and you see some of the commodities like coffee, what we talked about yesterday, coffee, still hot. Cocoa, lumber. What is the message here? Because the dollar is going higher. It's supposed to be bad for them. A lot of corners in the market are saying the dollar is going higher not because the dollar is strengthening itself. It's because other currencies are weakening. So the dollar is not going higher because we have Federal Reserve tightening the policy or reducing the supply. If that was the case, then most commodities, most dollar-sensitive stuff will be down big. But because some elements and corners of the market sniff that the strength of the dollar is coming from weakness of the other currencies, we see them moving higher despite the dollar going higher. Not all of them can pull that out, but some of them are, like coffee, so that's what we see right here. Let's go to yields, and I'm going to look at the 30 since it is the most important in my opinion. And here's what we got. See, let's do the 5 minutes. Here comes the CPI. It flushes down, and then I said, be careful, folks. I'm not sure that this is going to stick. I think we're going to reverse higher. And indeed we did. So we're going back up again in yields. CPI didn't solve the problem. And when you hit it with the CPI like today, which was a little hotter, but nothing burger, wasn't really anything out of the ordinary, or expectations, I should say. It tells us that probably this consolidation is going to lead us to a pop higher. And if that is the case, and we see the 30 going higher, and the 10, of course, the 2 after that, all of them will continue to go higher. See this, well, the confirmation will be closing above the top, which is 4.68. Maybe that's going to happen by Friday, but I think the fact that we're trading way above the close tells you that that's going to be a possibility in time, either this week or next week. And you look at the weekly chart, we got plenty of room to go hot here. And my prediction is, after what we've seen so far, I mean, we hit the market with, we'll see what jobless claims, I'll keep an open mind, maybe jobless claims will do something. But after the CPI and all of the data that got thrown against the yield here, yields, 30, whatever we look at, I think we might be heading back to the highs of October 23, which Means the mortgage rates are going higher too. And check out the 2 here. The 2 is the only one that is still holding the negative reaction that we got in the morning. So, and that is because folks are now talking about the Fed maybe still sticking with the 25 basis points cuts in December. We'll see about that. But the fact that the 30 is going higher, you can't really find any reason for names like the XHB and the home builders to go higher. I think they're going to continue to head down. So the pop that we got today in the XHB would probably be an opportunity to sell. And I would look for a failure. See, this number is really important. 117.17. See the reactions right here? And we've seen them before. This is a really important number. You see all of these consolidations here and reactions at that level. So we know that if we break this guy again today, you probably want to double down or enter new shorts in the XHB because the weekly chart would probably be bear flag and giving you a confirmation after the loss of 117.17. Next thing you know, the 20 weeks moving average will be broken and we head down. So keep an eye on that. Today, we see the defensives, the IYR, a little higher, but I don't trust these pops yet. But I think yields are coming back up. The IWM also higher, but it faded a lot of the gains from the early session. Let's look at the 5 minutes here. Gapped higher, then when yields came back, it's beginning to weaken here. And you've seen other names too that popped higher and got weaker right away when yields came back. So Tesla was watching RKK, which was up 2-3%. Now it's marginally up. So some of these moves are being reversed right now in the small caps and the yield-sensitive cohort. And we might see more of that if we continue to see the 10, the 30 moving higher. Now, the VIX is getting crushed, though. But the VIX is still not finding a footing. And it's below 1487. If it closes below, you're probably going to see lower numbers, probably in the 13th in the VIX. And technically, that should be good for the Qs and the SPY, even though they're struggling too, because some names are finding a little bit of a hard time to maintain momentum, like NVIDIA. So let's see if NVIDIA did any damage today. Not quite yet. Apple, not doing anything at all today. Microsoft, trying to recover, and that's pushing the indices higher. But again, we talked about this, the 200 and the 100, so it's below all of these moving averages. It's just not a good look for Microsoft, not yet. And if it loses 417.27, forget about it. You have lower lows to come. Google, on the weaker side today, gap down and still down. And Meta, maybe because of the TikTok news, the Trump administration is going to forego the ban on TikTok. So a little bit on the weaker side here for Meta. Let's see what Snapchat is doing. Yeah, Snapchat is down because we're not banning TikTok anymore. But anyways, we look at Amazon. Jeff Bezos dumping another $1 billion. Folks are buying. Right? That's the wealth transfer. You buy, he sells. And, everybody assumes that we're just going to, who cares? Amazon is heading higher. Then, economic problems, and we see something like this. And all in all, you've been flat for years, if not down. Meanwhile, Bezos is up $5 billion in cash. Anyways, these are some of the big caps that I see right now. But with the VIX down, be careful of being too bearish here against the indices. I'm not seeing the drop yet because this could be still a bull flag pattern. We need to negate that by the end of the session, or at least the end of the week maximum. We need to negate that by at least going down to fill some of these gaps right here. So it's a little too early against the indices. Day trades are okay, weekly trades okay, but not too aggressive. J&K popping a little higher today, but still within a downtrend here, so not out of the woods. It's not indicating anything that we have a recovery or anything. If it closes above the top of this candle from yesterday, then you have a recovery, but we're not seeing that right now. It's just the VIX going down, and it's allowing the algos to buy the indices again. Even though there's inherent weakness, specifically in the chips components. You look at the chips not a good performer for the week. I mean, a lot of them are I think some of the money is migrating from the software, from the chips rather, to the software sector. So we're going to continue to monitor this, but if the chips are weaker and some of the bigger names are weaker too, it's going to impact the indices negatively, where we have the VIX as a tailwind. VIX going down, that's a tailwind for the Qs, for example, to go higher. But then you have NVIDIA weaker, you have Google weaker, and that's going to keep it kind of flattish until we see a resolution of one way or the other. Other names I want to talk about, Bitcoin. What do we see here? Bitcoin a little higher today, 92. Of course, everybody's waiting for 100. I'm done with it. Good luck to anybody who wants to stay here and get that 100. Maybe you'll get it. Maybe they'll pull the rug before that. But I'm happy with getting out of Bitcoin at the level that we got at. And we'll see what happens from this point on. But besides that, folks, when you look at the market today, it's not really a Trump theme. That's now fading away a little bit. It's not a Trump theme. Tesla's fading away. A lot of the industrials that went higher fading away. But it's this sort of like passive inflow that's going on in names like Netflix, JPM, the financial markets right here, pretty much an automated way. And then the stampede in software. That's the story of the day, pretty much. So let me show you here Netflix and JPM, and you'll see what I mean. JPM just keeps catching inflows pretty much every day just because it's JP Morgan. Netflix keeps catching inflows. It's acting like a software stock right now. Goldman Sachs, Morgan Stanley, none of these make sense. These levels right here, Morgan Stanley or Goldman Sachs. The market is stronger, so I guess that's why we're popping it higher. But again, this is just begging to be a short at some point for both Goldman and Morgan Stanley. A lot of overreactions. Just keep that in mind, folks, that we see a weekly hour size at extremes across the board in the market. And it just needs the VIX catalyst to move the VIX just a little higher. And you'll see big reactions in the market. But right now, this look in the VIX here suggests that it's probably heading for a lower destination. Now, the lowest one we have is 1388. That's the low, I believe, for all the way since the summer. Let's clean this up so we can see it better. 13-ish. Can we go down to the 12 levels that we've seen, or the 11th? The point being is the downside is limited. We know how further to the downside can we go. We can go a little more, sure. But then what happens after that? And we've never seen kind of a gap like this in the VIX that hasn't been filled. So all of these are concerns right now, but there is still inflows, passive inflows going on in certain names, and optimism in software. That's the story of the day, folks. So let's see what you guys got here. I'm going to keep it at the Qs at the 3 minutes, and we'll see what happens. Okay, thank you, everybody. David, when you trade the VIX, what ticker are you using? When you show these trades in your videos and it shows them trading the VIX, what are they typically using? VIX futures. So when they trade the VIX, they're trading the futures. If you look at the VIX volatility, you're trading these futures. So you have all these contracts right here. Jan, for example, is trading at a certain level. So you trade these futures. That's what they're doing. The VIX used to have some really good ETFs in the past, but after the volume getting thing, they got rid of them. And you have these VXX and UVXY. All of them are not pretty good. You know, they're not reliable, to be honest with you. This guy, SVXY, is a favorite among retail traders just to short volatility, which I think if you want to bet on volatility to pop higher, one of the best ways you can do it is actually buying puts in this guy, because he kind of overreacts to the downside, underreacts to the upside. You see the upside tick, 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 but the downsides come out aggressive in this guy. So that's the only one I would use in trading volatility besides the futures, because that's the most reliable. Futures, number one. SVXY, number two. But the VXX, I haven't found it to be reliable, and certainly the UVXY is just garbage. Okay, let's here we got Mav, I can explain the software plays. During the Trump administration, software was the only sector that to have reliable gains. The software market is pricing in a trade war, and how they will avoid it could be. But see, today's not a Trump kind of day. Today, I mean, the FXI is up. Tesla faded the gains, now down. I think this is part of the Trump trade too. We see weakness in chips, but that's been going on not just because of Trump. Maybe Trump is a reason, but a lot of investors now realize like, hey, I'm way overweight chips here. Let me get out and maybe buy some software. I think that's part of the reason too. And the end of the year chase where folks are just looking for any laggards to buy. As you see in the IWM or the smaller cap names, all of them catching a bit. So it's multiple reasons, but I think, yes, it could be that the software may be easier to avoid any impact from the tariff wars. Okay, when do you think China is going to devalue the currency? What trade will you execute that move? China's already kind of shadow devaluing the currency, and with the dollar going higher, the yuan is getting hurt. So technically, the currency is being devalued. That's not the issue. That's not what's going to move, let's say, the FXI, for example, or Chinese stocks. What's going to move them is more stimulus, and specifically more stimulus in the market, and let's say stimulus in the hand of the consumer, something that the Chinese government hasn't done yet. A lot of the stimulus is in real estate, in the banking sector, in lending a little bit, but we haven't seen that huge stimulus that's coming to the consumer or in the stock market directly. That could be the case at some point because they have to be competitive. But I think at the end of the day, let's see how these bigger companies will do when the earnings come out. I think that's the most important thing we need to watch for. And that's coming November 15th, so really close by this Friday. If they're doing pretty good, and this is the most important name, BABA. If it's doing pretty good and it moves higher, I think it's going to bring risk-on appetite in the Chinese equities because folks will speculate that stimulus is just coming, maybe not right now, but it's coming down the line. And we have relief from a good report from the largest company. So you might see that resumption of finding value in China. But that's going to require, by the way, that's also going to require this market to cool off. Because if folks see the opportunities here and you have stocks going 4 or 5% a day, then there's no reason to go with the value in Chinese names. But if you see here volatility coming back up and you see these names getting hammered, all these overloaded RSIs, then I think that'll also be an added reason, besides Alibaba's earnings, to go back to Chinese equities, looking for value. Hey, Mav, I've got some UAL 85 puts for December 20. What do you think about those? Again, look, UAL and a lot of these names are acting as I said, paramount a couple of years ago. The way you deal with them is you buy the puts, but if you bought them right here at the 70s after a gap higher like this, now 80s are more relevant. So 85 is the relevant. You get another gap higher, now the 90s become more relevant. So it's kind of a chase until you nail the timing. So maybe your timing is pretty good here and the 80s is where we're going to be stuck in and then head down. And if that is the case, then you want to stick with the 85s. But I think if you see another, with the dollar going higher, I mean, you overlay these together and there is a correlation. There's a correlation, pull back, come back, right? So part of it is also looking at the dollar and when it's going to stop. But the other part is, do I see a reversal sign, which almost got it here, but do we see a reversal sign before it goes to the 90s, 91, 92, then probably 85 will be too low. And the number should be 95 at that point. So the question becomes, do you want to chase it on the way higher until you nail it, number one? Because this chart, the way it's going to play out, you buy the puts, and if you nail the timing and you have enough time till expiration in your puts, in time, this is going to frizzle out in a big crash and probably going to head down to the 60s, 50s and settle down there. But it depends on a lot of luck that your timing is going to be pretty good. So right now, you're within that range. The 85s are okay. December gives you plenty of time in a month. That's pretty good. But I would say if it begins to run out of hand and we see 91, 92, then probably 85 is getting a little too far out of the money. And you probably want to do the 90s, or you want to wait a little more till you see a reversal sign before you enter the puts. So for now, it's okay, but just monitor. You don't want the chart to run too far from your trade. Comics with Steve. You talked in last night's video about healthcare potentially being a good long position. Yesterday, I bought Pfizer as exactly $26. My question is, do you think the sector is going to continue to drop until RFK Jr. is ruled out? If so, what happens if he's invited into the position? Even if he does, who's going to regulate new legislations for these companies? It's Congress, right? He can't really enact the new law unless he's an FDA commissioner, which is going to be, Trump is using a lot of unorthodox tactics in picking his candidates. He might appoint RFK Jr. as FDA commissioner. It'd be really controversial. But usually you need some sort of a qualification for that job. And FDA has the power to hurt some of the big pharma companies. The Lena Khan position has potential to hurt, FCC has a potential to hurt big pharma in blocking some mergers. But as far as the rhetoric coming from RFK Jr., what is he going to do? What kind of legislations will be passed exactly to hurt these pharmaceutical companies? I think right now a lot of it is sentiment. And when you see that kind of stuff, I'll give you an example. RMD, which is a name that we bought earlier in the year, last year rather, this name dropped down because of Ozempic. If you look at the weekly chart, dropped down because Ozempic will hurt the sleep apnea machines or whatever. We see a huge selling wave here. But then report after report after report came out and proved that the company still has pretty good demand, pretty good business despite Ozempic. I think the drops that we see in some of the big pharmaceutical names, because of the RFK Jr. Fears, will be proven wrong. And you'll see that a lot of these are opportunities to buy. Maybe you nailed the timing here. You got it really oversold at 26, and now it's moving higher, ready to begin a reverse course as folks begin to really assess the risk from RFK Jr. Maybe. So I'll stick with it right now. I'd set a stop loss at, let's say, 25.5, just in case. We're going to revisit the lows right here. But right now, I think maybe you nailed a really good entry here in Pfizer. So you stick with it for now. And it's also a really good dividend. I've been thinking about it. Maybe I'll join you here. I tried using the 30 calls, didn't work out. But this 6.4 with a company that produces a lot of cash and reliable cash flow for Medicare, I think it's going to be an attractive stock at some point. We'll look back and realize that there was a really good entry here in Pfizer. If the stock's trading at 40, 45 later on, and you have that generous dividend that you locked in. Anyways, let's look here at the Nifty and the Nikkei down 1.3% today. Do you have any insight on that? Why do we see the Nikkei down? Let's look at JPY. JPY continues to go down, so that's supposed to be good for the Japanese companies. I think Sony did pretty good recently, and maybe that's one of the Japanese names here. The earnings report was pretty good. So I would look at Sony, maybe if it continues to drop here, maybe Sony is actually a good buy because it's been consolidating here in a while. It offers a lot of value. And let's see if it pays dividend. Nah, dividend's too small. But it could be Sony, could be an entry. Toyota been suffering a little bit, but it is oversold. And as I said in my charts to watch analysis, we're probably going to see an entry in Toyota coming out really soon. So long as we don't cut below this number right here, the 168.66. So I think that the Nikkei should recover in time. I think right now a lot of folks are distracted by the Trump administration win, and it's going to be bad for Japan, bad for China. But again, that could open opportunities to buy stuff, such as Toyota, since it is corrected huge here. So keep these names, Sony, Toyota. In time, those Trump assumptions will be faded, as we've seen back in 2016. Okay, Mav, Carvana, something you will short. Definitely, but not right now. Not right now, because right now we have an environment that is very speculative in the market, and we see short covering in a big way. I mean, a lot of this is just short covering, okay, folks? It's short covering, so the value shouldn't be anywhere near here. So all of them will make really great shorts at some point, but let's see this phase, this kind of sentiment of, oh, the Fed is cutting rates, inflation is not a threat yet, recession is not a threat yet, and you have Trump optimism. So if you just write a list on a piece of paper of the tailwinds and the headwinds right now for the sentiment, what people are looking at as a positive versus negative, you will find more positives than negatives. And that's going to initiate that risk-on sentiment and the euphoria that we're seeing. When that begins to change, and especially if we see the recession risk being introduced in the picture, then you see names like Carvana crashing in a big way. So yes, it is definitely in my short list, but I don't want to buy something or short something here and see it ripping higher, because folks are stampeding to buy it. That's buyer number one. The market maker is buying it as folks buy call options. That's buyer number two. The shorts are buying it because they're covering. Folks who forgot to cover their shorts right here, all of a sudden they're covering right now. That's the third buyer. So you don't want to stand against three buying forces. You need one of them, two of them at least to recede. And that's not going to happen without, at least when you look at your list of positives versus negatives, until you see the negatives beginning to fill in, the list of the negatives. So it's going to happen, but not right now. Same thing with Palantir, by the way. Palantir is now worth more than Lockheed Martin, more than Northrop, more than Raytheon. That doesn't make sense at all. But in time, again, once that sentiment changes, it'll make an excellent short. So all of these are, you write a list of these shorts and you monitor them. It's once in a while you try to enter some of them. Like I tried to enter this guy before with no success. Entered, then had to cover the short again. Then at some point you nail the short and you keep it. Shorting is usually a trial and error because you're trying to pick a top. Sometimes we're going to get lucky and the timing will be great, such as the SMCI trade where we got into February in the short, even though it went a little higher, but then it crashed. But in other times, it's going to take a few more times. I mean, I have some names, by the way, in my short list, like Sprouts. I mean, does this make sense to anybody? There's a Sprouts just next to my house here, and it's empty. And when you talk to people there, all they complain about is too expensive. And why would I go to Sprouts when I have Amazon's Whole Foods, same products, cheaper price? So it is in my short list, but again, if you shorted it here because it was overbought or here, it just kept going and going and going. You need to see something stronger as a reversal signal from a weekly chart perspective. And you can see here, we've never gotten it. We've never seen a bearish engulfing candle, not yet. If we see it, if we see a reversal for at least one candle, then we begin to short these names. A lot of them. Dillard's. That's one of those that I'm looking short here. So there are plenty of names that I'd love to short, but in time. Timing is not good for Carvana right now. Okay, NVIDIA, 143 puts. Do you get out or stay? I think I saw your question in Discord. Let me get the expiration date. So, okay, you said that you got NVIDIA for this week, 143. Okay, let's look at NVIDIA here because maybe you want to close it today. NVIDIA, 3 minutes, because the VIX is low. Okay, the VIX is going down, so you don't want to take the risk for too long. So you have 143. You're out of the money. NVIDIA is down about 1%. Yes, I would close it. Okay, it's for this week. You're up on the trade. I would close it. Especially if the VIX was up, I would say keep it. But the VIX is getting crushed. Okay, so that could bring the big caps up by the end of the day. So I'd close it right here. Senior, still have 225 calls, 200 puts. That's the strangle for Amazon. Could you outline some bullish and bearish prices if it passed, I keep that leg of the strangle and cut the other one? Or should I keep holding? I think right now, November 29th, you should still hold the strangle at this point. But let's say by the end of the week, we have to do a risk assessment. Where do we think Amazon would go? Closer to the 225 or closer to the 200? Right now, you're in the middle ground, so you don't have an answer. By November 29th, I mean, we're in the 15th, so you have next Friday would be the 22nd, and then, so you have 2 weeks. In 2 weeks, can we be above 225? I would say it's a long shot. I mean, this is, it took a little bit of time here. The market looks parabolic right now, but I doubt that it's going to be at 225, to be honest with you, or above by that expiration date. If anything, if it's going to blow through one of these numbers, it's probably going to be the 200. If there's a reversal in the market, all in all, this guy could pull back really hard. But as far as the upside, maybe 220-ish, 222-ish. And I think if we go to that point, if we see more upside in the market, and we hit in Amazon, let's say closer to 220, I would close the 225 right away, especially if it happens by next week. That's the sweet spot. If it happens by next week and you're 218, 219, you're probably going to be up on the 225 that you bought. Then the 200, the risk in the strangle, of course, is if you keep both and one of them run away from you, as if you get, let's say, above 215, and now 225 is the one that you want to play. You don't want the other one to decay completely to zero. You want to capture some value from it. The point of the strangle is I'm not sure where the stock is going, so I'm going to buy call and a put out of the money. And once I get the clear direction where I'm heading at right now, I got to close one. And that's the secret in success in the strangle. And right now, you're not there yet. I would say if we go to 215 and above, you probably want to close that 200 and concentrate on the 225. But the 225 has to be closed before. I don't think you're going to make it to 225. 218, 219, that's going to be the sweet spot to close it. If you had the 220, that would have been a different story. I would say, yeah, there's a legitimate shot. You could make 220. So that's how I would manage this trade for Amazon. Jeff, what are you going to do with the RKK trade? So today's is a critical day because decay is going to kick in if it doesn't work out from here. So RKK, because the yields coming back up, let's see where yields are trading at right now. They're probably hitting higher. So RKK, I need to see a negative closing today because this is a weekly trade, right? If by today we don't see a negative closing, then going down to 55 by Thursday or Friday, probably going to be a long shot. So by today, if it's not closing negative in the red, let's say below 57, you're probably not going to work out. So if you still like it, if you think that RKK is stopping and it's going to do 55 and below, you got to extend the expiration date at least next week. So I'll update you on what I'm going to do, but right now this is the thinking. I need to see if it's going to flip back to negative and crack that 57 worth of support and close below this gap here, at least from, let's say, a 10 minutes perspective. That'll be good enough for me. If you close below that gap from 10 minutes, then you're probably going to see more declines to come. And there's a real shot. The 55 could be in the money by Friday. Okay, do we play the rising wedge for pullbacks? Can you do a video on it? Yeah, but we don't have a lot of examples in the tracker for the rising wedge. We have for the falling wedge, which one of them is QuantumScape today. It is working a little bit, so it might have a little more to come. But the rising wedge, we haven't done a lot. We've done one or DoorDash long time ago, I believe right here, and it produced just a little bit of gains. It wasn't enough to make the trade profitable. So unless we do more rising wedge trades, we can't really learn from the examples, real life examples that we've done. So I'll spot some of these opportunities just for, for the sake of making an educational video. I'll try to spot some of these. Now that you asked, I'll try to spot some of these rising wedges and at least do paper trading on them and then review those for you. What is your number one trade for this week or next week? Look, with the VIX, the way it's heading down here, I cannot be too negative on the indices, right? So when it comes to the indices, Maybe I'll play some pullbacks if I see opportunities in some of the support and resistance lines being broken. Yeah, I'll take shots. Same goes for the SPY. If I see, like yesterday, there was a trade of the 595, 590. If I see opportunities like that, I'll take it. But with the VIX going down, hard to hammer the big caps. Okay, what else is moving in the indicators? Dollar moving higher. So the easiest trade will be shorting the metals, right? On the other hand, you also have the trade war tailwind, so that's going to be a tough one. And if you want to short gold or silver, maybe that's going to be an easy answer since the dollar is going higher, but you might see gold coming in demand. So yes, there's an easy short in gold, but it's not going to last for too long. Then you look at the yield sensitive stuff, and it appears to me that yields are heading higher, at least in the 10 to the 30. So I would say that the yield side is the easier trade, and maybe here we're probably going to pull back in the IWM and the XHB, all these names right here. I think we'll see more downside to come. So XHB, if it closes below 117.17 today, I'll take a short on it. So concentrate more on the yield-sensitive elements, the dollar-sensitive, because the VIX is down, and if you want to trade the VIX, you probably want to buy calls in the indices. You probably want to bet that the Qs will play this right here, bull flag. So up to you. You have many trades based on the three markets that I explained to you. If you think the VIX is going to continue to head down, you probably want to buy TQs, T-triple-Q calls. If you think that yields are continuing to go higher, you probably want to buy puts in the XHP. If you think that the dollar will continue to go higher, probably you want to buy puts on GDX or GLD. Let's look at GDX. GDX down, maybe breaking support, further more downside, although it's a little oversold. So I gave you three options. You pick whatever you like. I want to go back here. Just before we began talking about all of this, because I hate losing my support and resistance lines. So if you hear that snoring, that's not me, folks. That's a dog. Let's see here. Nope. We've erased it and forgot to put it back. Here we go. There we go. We're back. I don't like losing my lines. Okay, let's see what you guys got here. If NVIDIA does not correct after the report, then that could be a green light for the market to pump higher. Correct. If NVIDIA produces good results, and I explained to you that the law of large numbers is going to make it really, really hard. I mean, you need to do a growth year on year of over 100%. Possible? Maybe. But we've seen it peaking in the last report. But yes, the fate of the market depends on NVIDIA next week. GDX, December 20 calls entered now at a loss. Should it average down or will it keep going down? We just talked about this. So if you have the 20, GDX 20, that's deep in the money. I think you mean maybe, December 20 calls. Gotcha. You probably have them in 38, right? 35, maybe 40. If it's 40, it's way too far. If it's like 35, 37, that's okay. Because you're oversold. And again, we talked about the dollar. I don't see it pulling back here because it just keeps going higher despite anything. But will we see a point where investors say, okay, we got a good correction in gold and I'm ready to buy the dip despite the dollar going higher. I don't care about the dollar going higher. I think that we have a great dip here in gold and I'm comfortable to buy it at this point. The thing is, you need to see at least a sign of buying intraday, daily, maybe showing up right now. We'll see. If we close above 2,600 today, that's a really important number. If we close above 2,600 today in gold futures, I'd say double down on the GDX because we might see gold coming back despite the dollar going higher. If we close below 2,600, I would say cut it because you're probably going to see more pain to come as the dollar continues to go higher. Okay, Merck, it seems to be showing a bit of life today, holding December and Jan calls. I'm with you. I'm going to stay with the healthcare names. I have Merck December calls. I'll stick with those. I think it's folks right now distracted by the momentum trade, but in time, they'll be back to the yield trade. the dividend trade. And they'll notice that Merck got a little cheap and even the dividend improved. I mean, 3% for Merck is pretty good. So I think it's going to catch a bit. Just give it a little bit of time. But now maybe it's kind of forming this, by the way. It's kind of beginning to form sort of a falling wedge-ish. And it will break above it, so I'll stick with it. Now, as far as LMT, could you comment on today's drop? LMT 555.5. We're still above though, so a little bit of a pull back here at the 20. Let's see what 50 is the one that stopped it. Let's see where the 100 is, just to make sure. It's probably the 50 that did it. So the 100 is support. 100, that's your support. 50 is your resistance. And the stock bounces from support to resistance, pulls back. If it finds support at 555.5, good. If you see a move higher, perfect. That's going to be an ABC. But it could go all the way down to the 100 to find support. So the 100 is your line in the sand, right? You get out immediately if you see the 100 is gone. Now, if I remember correctly, you have the 600. Problem with that, guys, it's way out of the money, but you still got time to December. So I would say if you close below 555.5, you go down to the 100. If it breaks the 100, this is going to be the probability is going to drop so much on the 600. It's probably going to be a loser, worthless trade. But if you see a rebound here at the 555, we see, let's say tomorrow, a green candle, and now threatening to take the 50, then you have to double down. You have to average down because you probably entered the calls before the elections when the premiums were high. Now the premiums are down. So you have to average down. This is going to be a really challenging trade because of the entry price. That's the problem with it. Another way you can mitigate the risk a little bit is to sell an upside call, but you're already out of the money, so you're not going to get a lot of premium from selling an upside call. That will happen if you cross above the 50 and you average down, and now the trade is becoming profitable, right? Then you want to probably sell another spread, December spread, to reduce the entry cost even more, and then you got a shot of making the trade profitable. But this is, I'm just being honest with you here. Because of the entry cost, it's going to be challenging to fix this trade. So leave it up to you. If you close below 555.5, you're probably going to go down to the 100. Is that okay with you or not? If you go down to the 100, and you close the 100, below the 100, and you're probably heading down for lower lows. And at that point, there's no chance that the 600 will be something that is attainable. Okay, keep the Tesla trade, or the Tesla trade rather. Okay, keep the Tesla trade. Well, today with the reaction that we got, I would say it is encouraging to keep the trade because we got the 320. I would love to see, I don't want to see it close below 320 exactly right now. By Friday, it's okay. So this is the sweet spot. I don't want to see it above 335.30 by the end of the day. I want to see it maybe closer or touch below 321.26. If it is below, keep. Although the 315 could be a risk at the end of the week that we sold. So it's up to you if you want to buy it back. Let's see how much it's worth right now. Tesla, we do the puts here for the 15th, and we sold 315. Man, it's a little too expensive. Yeah, I'd need to see it decay a little more. So right now it's a sweet spot, and the reaction that we got today, big pop, and then reversing, and now probably coming back down. So yeah, stick with it. Stick with it. Fingers crossed. If this one works out, it could work out big. If, let's say, we go down to 319-ish by the end of the week, consolidate here. The next week we drop to 300. Oh boy, that's going to be a big, big trade. But anyways, we'll keep our fingers crossed here. Yes, I'm keeping it. What else do we have here, folks? Come on. Give us some stuff. See even Discord here. Mike, this is a really good one. Major big question. Could the Fed continue stimulating by bullying banks into buying and engaging in reverse repos? I believe this is a reality to continue pushing stocks higher for longer by another form of manipulation. Well, the repo facility got hit really. For a lot of the reverse repo is actually going down. So if the Fed is encouraging them behind the scenes to do that, yeah, technically, yes, it is stimulative. when you have flows in the reverse repo. But it's one of the factors. Okay, it's not the most important factor. It's just one factor of easing, which could actually push yields higher and push inflation risk higher and be an upsetting factor for the market. So it's one thing to consider. Maybe the impact of this is being seen in the banks, right? Maybe this is why we see the XLF just going ballistic right now and with pretty much very little pullbacks. Maybe this is why we see the KRE doing the same, even though there's no reason for the KRE to go higher with yields going higher. But maybe this is the encouraging reverse repo is behind the rally in banks. But that's the limitation to it. It's not going to impact the big caps or the most important names in the market. What is your take on the party boy UNG? Let's look at UNG here. Nat gas moving high, but we need to crack above that 1410. So let's look at the Henry Hub. If we do the Henry Hub, looking pretty good. Okay, looking pretty good. It did the correction, looking pretty good, but we need to get out of this range. So if this was my trade, to stick to the UNG calls or BOIL for now. But if you're going to buy BOIL, give it a little more time. Not just 1 week, but give it 2 weeks minimum. And I think we'll be back above 3 in nat gas. Because this is the season anyways. This is the seasonality will play out in nat gas. And you see here, December, we had a nice run last year in nat gas. Usually that happens at the end of the year. You see a rally in nat gas. So seasonality is in your favor. Let's stick with it. Give us a gamble for Friday. Let's do that at the end of the day, though, because right now, I mean, you have VIX still heading down. So if I had to gamble, to be honest with you, I want to see how the behavior is right now. It'll probably buy some TQ calls, betting that this is going to be a bull flag that pops higher. But I need to look at these individual names one by one and see which one is going to do it, because Apple doesn't look like the one that's going to do it. Microsoft, still on the weaker side. It's the act forward today, but still on the weaker side. Will it be Meta? I don't know. Amazon? Maybe. Amazon is the one that's breaking out. Google? Not yet. Nvidia? Not yet. So if I see more encouraging signs at the end of the day, maybe it's going to be the TQ calls. But remember, PPI tomorrow and retail sales Friday, so it's not going to be that easy. Hey, Mav was planning to buy HIMS this morning, but it gapped up. Now cooling down. Would you suggest I wait or go in half the size? Look, right now it's a really good period for speculation. I don't know how long it's going to last. Another day, 2 days, another week. But I would say anybody who wants to chase a speculative rally right now, you got to do it right now. Because you wait for a pullback, it might end already. Now, the risk that you take is it might be your lucky day that you enter a speculative trade like this and then it crashes right down the next day. That's always a risk. So if you enter it via shares, for example, you got to set a stop loss. If you enter via calls, the disciplined thing to do when you have something like this that went way higher and continues to explode higher is to open spreads. That way you can exploit the increase in implied volatility in your favor by opening spread. So that I would say if you think that it's going to go higher and we still have that risk appetite period going on for a little longer, you got to enter right now. But just set that stop loss. Let's say, I would say if we take the low of this candle, 26 even, I would say that there'll be huge risk that we could be reversing. So right now, I don't see a reversal. I just see that maybe folks booking a little bit of profits here. I would wait for the entry, though, until I see a little bit of improvement. So you need to see some green candle that takes the high of one red candle before you enter. The 10 minutes is okay. You can use the 15 if you'd like. But the 10 I think, is the sweet spot because it has more candles, at least right now. So if you see, right now it's not a good entry, right? If we see a lift over and we trade above one of these candles, this one specifically, yeah, I'd enter right now. And just set the stop loss at 26. That'll be about 7% from here. I mean, this is a speculative trade after all. So, yeah, I would enter it after I see a sign that is reversing intraday to the upside and then have the stop loss on it. Okay, semiconductor have been weak 4 days in a row. Do you see continued call volume in NVIDIA? Does that mean we may have semiconductor rebound next week? And then is Lulu overbought today? Let's take it one by one. So the SMH, I think the weakness in the SMH and chips in general, it's more sustainable than people think. But we have an important catalyst next week that is detrimental pretty much to what's going to happen, which is NVIDIA. I think my 2 cents, if NVIDIA's disappointment, folks will put 2 and 2 together and realize that the Trump administration will probably be really bad for semiconductors. And you'll see a huge flush, that this is going to resolve to the downside in a big way. For semiconductors to catch a bid and rebound higher again, you need NVIDIA to deliver, and you need to see that risk appetite in the smaller caps and the speculative names. You need to see a hit in that first, so the money can go back to chasing the safety of the big caps like NVIDIA. Right now, there's no appetite by the retail investors to go with NVIDIA because cryptos are hot. The speculative names in software and small caps are hot. And that's where the action is. You need to kill that sentiment a little bit. So when I say that kind of stuff, folks, you write it down and you monitor. Right? You monitor day by day. If you see that the software names are pulling back, if you see Bitcoin pulling back, and if you see that the chips beginning to stabilize and catch some momentum, and NVIDIA comes out okay, then yes, you probably want to go long again in the semiconductors. Now you write the list the other way. If NVIDIA is not good, that's the only thing you need to know about downside bets on the SMH. If NVIDIA is not good, then you're probably going to, the sentiment of the Trump administration will take over, and we're probably going to take that trend line and begin to get hit really hard in semiconductors. So right now, if you're looking for a trade, I would say TQ calls, weekly, bi-weekly, next week, that's okay. But going semiconductors right now is alone, it's a little risky. Okay, now that the elections ad money is done, and reward advertisers will suck it up for Musk and going back to Twitter, is that enough to hurt Google and Facebook ad business? You want me to be honest with you? I think Google business, the advertising ads, okay, that creates a lot of money. But at the end of the day, the advertisers have been avoiding YouTube altogether. Ask any YouTuber, the money's down big from advertising. You can put in a really good video, get 100,000 views, and you'll make like $200 out of it if you're lucky. So the advertising money's down all in all. And Google takes, of course, more and more share from the creators. But the problem is with the ad money out, by itself, that's going to be a negative for Google. The Trump administration, of course, not favorable for Google. They're going to try to crack down on them. So I think that right now, from a technical perspective, you still got that risk, right, of a bull flag. Because this was a rejection point when it gapped above the Bollinger Bands that was excessive. It came back, corrected. Now it's up again. It's consolidating, allowing the bands to expand so it can absorb a move higher. That's the thinking right now. You need to negate that from a technical perspective before you see it going down again. We usually point out at the lowest point of the flag, which is right here, 177.19. If you close below that, then yes, another rejection. Now you have a double top, and you're probably heading down to close the gap again, maybe heading down below the gap. So the fundamentals aside, from a technical perspective, that's what I would look at as an entry for Google Shorts. Okay, what's your thoughts on the PPI? I think services are going to go up as a plumber. I haven't seen anything slow down, even HVAC electrical. All I see is all heads and no new young guys joining the trades. Yeah, the prices of the materials that you're using in your job, that's not going down. That continues to be insane. You ask any job in plumbing or roofing, the material is so high still. So you have to charge more for your services, and that's inflationary in the economy. And a lot of folks are not understanding that. Even in mechanics, auto mechanics, same thing. The tools cost more, the oil costs more, everything you need costs more. The new employees will cost you more, so the prices continue to go higher. And as far as will the PPI show it, Maybe folks right now looked at the CPI and said, okay, a little bit hotter, but not a problem. Maybe the PPI will begin to show it. I would also point out to the export data from China, which came out hotter. It might be a leading indicator that the PPI could be hotter than folks expect tomorrow. So PPI could be the surprise. Usually it's not a big deal, but we'll keep that as a mental note that yes, it could be a surprising element. Don't forget that we have jobless claims too coming out tomorrow. Okay, other than NVIDIA or Black Swan, what at this point will be a catalyst for a pop in volatility? A pop in volatility, if you're talking about a legitimate pop, like a big spike in volatility, that's going to require some sort of, like you said, a crisis, a currency crisis, or yields are so high that something blows up and now we know about it. Yes, that's going to cause it to pop higher. But as far as recovery, correcting the course from oversold to beginning to catch some bid, that could be options expiration this Friday, where you could see volatility coming back. Because you got to remember, today's Wednesday, it's the expiration date for the VIX. But as you see, the expiration date for options on equities and the indices, that could be the catalyst for the VIX to come back a little bit and find a rebound, a legitimate footing on Friday. But as far as a big pop, I think that's going to require NVIDIA to get hit. And then folks will freak out and begin to buy hedging against the indices because NVIDIA goes down, the biggest weight, it's going to impact everything. So yeah, I think NVIDIA is the number one catalyst right now that we can see. But for in the short term, to find a footing in the VIX, I think it's OpX coming out this Friday. Can the PPI drag the market as a whole down at least 1%? I doubt it. Be honest with you, I doubt it. Unless there's a huge surprise in the PPI. And I think my 2 cents, even if it comes out a little hotter, it might bring in what we've seen today in the CPI. Or yes, it is concerning. Yields continue to go higher, but with the VIX continuing to go down, the indices will still find a footing. Okay, so still not in the. I don't see the negativity in the indices, not quite yet. I think that's going to be in NVIDIA next week. So the PPI will be more impactful against the IWM and the yield-sensitive names tomorrow, if it comes out surprisingly hot. Okay, let's see here if we're missing out anything, folks, before we sign off. Go to Patreon. Let's see if folks are commenting over there. Beauty of Patreon is it gives you a lot of tools here. Okay, let's see. No commentary on Patreon, so we're just going to skip that. Okay, so TLT has more room to come down. If the PPI is hot or hotter, yeah, I mean, look at what happened today, right? You get a reading that the market thought it was good, CPI-wise, and we see yields going higher. And then you look here, at the 2-year, that's the only relief that you see. And I don't think that's going to last for too long either. PPI might bring that guy back up. So the trade, if you think that PPI is going to be hotter, probably going to be against the SHI more than the TLT. Because the SHI is the one that tracks the 1 to 3 year. The TLT tracks the 20 to the 30. So it's probably going to be puts on SHI. Not the TLT. TLT, it tracks, see that the 10 to the 30 moving higher, so we see the TLT down, but the SHI up. Let me just confirm that that's the case. Yeah, SHI up, TLT down. So the SHI is more relevant to the PPI tomorrow. Okay, Lulu, overbought today. Sorry, forgot about this one. Lulu. Overbought today in the daily chart. Not quite yet. Not quite. I think it wants to reach the Fibonacci here. Let's check out that number. Probably catching the weekly better. Yeah, it's not overbought. No. 336.94-ish, around that number. I think that Lulu could rally all the way to this report. So if it passes 336.94, let's go at 337. It'll probably head all the way up to the 370, where we see the 50% retracement. And if it goes all the way there, then we have a risk of a pullback when the report comes out. But I think between now and the report, I think it's going to be positive for Lulu. So if I had to trade it, I'd probably trade it higher, buy calls on it. And you use the butterfly, by the way, because this is an expensive stock. So And you have a short amount of time till December 5th. So we'll use called butterflies on it. Okay, the VIX, 225, 27 calls, 13 puts. So you're doing a strangle, Tommy. You're doing a strangle on the VIX here. I think you might, like we said with the Amazon strangle, right? So if you have the VIX 13 puts, that might play out first. You cash that ticket, and then you keep the 27. See a pop higher again in the VIX, you cash the 27. Yeah, shy up, TLT down, because shy is up because the 2-year is down. But the TLT is down because the 10 to 30 year going higher when it comes to yields. So tomorrow, if we have a harder PPI, the assumption would be, because right now, by the way, despite the fact that we have a rebound of the 10 year, 10 to the 30, the market is still pricing in rate cuts in December. So if a hotter PPI would negate that tomorrow. So it would impact the shy more than the TLT. Bristol Myers, I exited the puts I entered 2 days ago. Do you see more pullback? Can you also comment on AVAV? So BMW, do we see more pullbacks? Maybe. But again, folks are going to still buy the dip here. So maybe you'll get another crack out of it till the end of the week as we see selling here, profit taking. But folks will find a buy. I mean, you see here, we got a pop right here. Buyers showed up right away. So here you might see a little bit of declines, maybe another day, and then you see buyers right away. So I would not look at it as, well, when I re-enter the trade again. I think you're done with the trade. You scored from it. We'll look for another one now. As far as AVAV, what do we see with this guy? It's hot, hot, hot. And we have a report coming here Tuesday, December 3rd. I think this is kind of showing more signs of readying to reverse. Correct. So if I had to pick against it, I'd probably be put options buyer here. Aerospace and defense, I mean, you've seen LMT going down a little bit. You've seen some of them going down, but remember when we talked about this guy just a few days ago? Or was it HWM? That continues to go higher, right? So if you like that sector right here, I would go with HWM rather than AVAV. HWM is a reliable name. It's been strong and nothing is stopping it right now. Okay, Oxy, huge drop today. Good to enter calls. Oxy, well, there's a buyer right today. Let's see the report here. Beat, okay, and we see some buying beginning to show up. It's not enough, though. It's not enough to say that it's out of the woods, because this could be sort of an reaction, counter-reaction, taking profits, and then we see more downsides. So I don't think that Oxy's out of the woods. I would not. If I'm going to chase, I'm probably going to go with the Exxon. That's the best looking chart. That's the one that's coming back up. Stick with Exxon. It's going to be more rewarding than Oxy. Or if you must go with the XLE, it has Oxy in it, but it's not being impacted negatively. So I would go XLE, XOM, or OIH, since it has the Trump tailwind. But forget about Oxy right now. Until Buffett announces that he's buying more or he's buying the entire company, then that could be a tailwind. But right now, let's stick to these three: Exxon, XLE, OIH. Pick your pick. Hey Mav, did we cover the Microsoft butterfly? Been on-off calls, took my eye off, was up this AM, now down 50. Because the expiration date is really near, so we're at 420. We need to see it coming back to 420, or closer to 420 at the end of the day. It's a little too hot. It might pull back. If we go down below 424, I would say that you still got a shot to keep it. But look, with a weekly trade, you got to close fast when you make profits. But I would expect that this is going to pull back a little more by the end of the day. And if it is below 424, we'll give it another day tomorrow. If we head back to 417, 418, then trade is back in profits again. So just give it a little time here to pull back a little more, see where it's going to find footing in. If it finds footing at 426, that's not good. Finds footing right here, 424, that's not good. If it goes down here, okay, we're talking now. If we have a pull back to here, we're back on track. And we might actually extend the expiration date on the puts butterfly. Okay, folks, since we covered pretty much everything here, let's look at last look at the VIX here, 1388. That continues to be support for now. We might pop higher, so I'm leaning toward maybe buying some VIX at this point and then complemented with a TQQQ calls for next week, just in case this bull flag plays out. And that way you have balanced exposure. So maybe VIX with the expiration date of this week, and then TQ calls with the expiration date next week. I'll play with it and let you know what I decide on it. But besides that, folks, let's look at Tesla before we go. Tesla still consolidating here. Let's look at some of the speculative names. RKK going back negative. IWM probably going to go negative at the end of the day. Good Hood. Some of the crypto plays also reversing a little bit. So, yeah, we're seeing with the yields coming back up, we're probably going to see these yield names coming down. If you think the PPI is coming out hotter, they're probably going to get hammered even more. But the only sector that I'm still not seeing that reversal in or any sign of weakness is the IGV. Remains hot, hot, hot. And no reversal yet. Cryptos may be showing a little bit of weakness. Some of the yield-sensitive names showing a little bit of weakness, but not this guy yet. Anyhow, folks, should I hold the NDX or take a hit? Look, I think it's too risky right now. Maybe at the end of the day, NVIDIA will come out and crash it all next week. That's a possibility, but I'm just looking from a technical lens alone on the Qs right now. And the risk that I see is consolidation like this. And you saw what they did today in the unusual activities, right? They bought calls on Amazon, Meta. They bought calls on a lot of the big caps. So right now, I would say the immediate risk is a bull flag play out. If we negate it by taking the lowest point of the flag, 508.34, if we take that out and we close below, okay, now there's a shot that NVIDIA comes out bad and we come back down and we erase the entirety of this move. But right now, the odds are against you, and time, until you make a decision, time will also be against you. The discipline would say that you take it off because this is the immediate risk that we could break above. And if we close below 508.34, then you might consider putting it back on. But you still have NVIDIA. I think after NVIDIA comes out, if we're trading lower in the Qs and NVIDIA breaks, I think that's going to be where we enter really big time in the shorts, because it's probably going to pull the market down in a big way all the way till the end of the year. You know why? Most portfolios overweight NVIDIA. If NVIDIA goes down, folks begin to freak out that, hey, I might lose some of the gains that I scored this year, and let's get out right now. So you see that kind of rush to the exit door. And with NVIDIA's weight, it's going to pull back the Qs down with it. So there is a case, but in options trading, when the trade goes against you, you don't want to hold for hope for too long, because holding on hope for too long, time will cause decay. And more upside movement in the case of your bet to the downside will also cause more decay. The discipline thing when we see something like this happening is exiting the trade. That way you lock the loss. There's no more losses accumulating. And if the trade shows us that it's back on track, such as breaking support or reversal pattern, then we put it back in. So if we do that practice, folks, if you do that practice, instead of you enter a trade and then it becomes a loser right away, and then we hold on to hope for a little longer and then we see more decay. If we practice, take the loss, lock it in, and then if we see the technical pattern improving, you put it back in and track. If you do that, you'll find out that your results are becoming a lot better. You think NVIDIA sells into the close, I will hold my 143 puts and sell later. Look, we covered this. I told you, I don't know if NVIDIA is going to pop down at the end of the day, but with the VIX as suppressed as it is right now, maybe you want to stretch it all the way to the end of the day. If you crack 146, maybe. But with the VIX being too low, I would close this guy and open for next week, which will cost you more, but you're not going to have as much decay as you'll have in the 143 that you got if NVIDIA moves higher at the end of the day. Monitor the VIX. Maybe it's a little too low now and we'll find a rebound, maybe. But because it's too low right now and it got hammered earlier in the day, I still see a risk of NVIDIA trying to find a footing. So if you want to keep it to the end of the day, your call. But I would say if we're, let's say, 145, I'd book it and then roll to the next week. Again, if you see the VIX breaking this, 1388, you probably want to exit it right away. Okay, folks, we're just going to wrap it up right here. We've done a little over an hour and 20 minutes. So we'll wrap it up right here, and then we'll be back again in the closing hour on Discord and see how the market develops and give you my 2 cents on the last trades for the week. We'll talk about the TQ calls. If I see the opportunity, I'll share it with you. But anyhow, thank you so much for joining us for this session right now. All in the VIX. You got to keep that 1388 though. If we keep it, I think that Friday will be a better day for the VIX to move higher because of OPEX. But anyways, thank you so much for joining us this session, folks, and we'll be back again by the end of the day. And of course, later in the evening for the video. Good luck, folks. Rest of the day. Take care.